Hey everybody, it is Friday. Welcome back to another episode of Trucker Money. Fridays we like to get together, talk about something outside of truck and kind of take a break from it. We all need that once in a while. I know I do. And rates are good. A lot of us are making a bunch of money right now. Just trying to provoke you to think, what are you going to do with all that money? Right? Do something to change your life, make things better for you, maybe for your kids, for your family. Uh, so this is not financial advice. This is just an exchange of ideas. I share my personal journey. Nothing to get upset about, but it is not financial advice. And I kind of go through any moves I made for the week, kind of my thoughts on some different things, what I might have earned in passive income or side income. So this is for the week of the 9th through the 15th of January 2022. Wow, we are well into January already. So, my favorite kind of side income is just passive income. I do that with some rental property, some side gigs here like YouTube, and make a little bit off the MUDFLAP and promoting the fuel ox a little bit. And my favorite one though is my passive income dividend portfolio that we have in different dividend paying stocks that pay me every week of the year. Kind of unintentionally set it up that way, but that's pretty cool. So for this week, we only got one dividend increase, which is cool. We'll take it. It's one of my favorites, although not one of the biggest in the portfolio. Stag Industrials raised their dividend. Stag is a commercial and mostly industrial real estate investment trust. They own warehouses. They own many Amazon warehouses. So Stag Industrials is kind of my play on owning Amazon because I do not own Amazon. Kind of have a personal objection to them, which is just my own personal opinion. Everybody else, I don't even buy from Amazon. Who would have paid out this week? It would have been Realty Income, ticker symbol O, a real estate investment trust. Also, we talked about them a little last week. Ticker symbol MO, Altria, paid out this week. They are the tobacco company, as well as other things. They're a pretty diversified company. And York Water Company. I think I'm going to talk about York Water Company next week. It's a really interesting company. I find them very fascinating. Ticker symbol YORW. Anything I bought this week, I put a little bit more money into Southern Company, ticker symbol SO. They are a utility. UGI, which is also a utility, they're more of a gas utility, whereas Southern is more of an electric utility. And a little bit more into Prudential, just because I want to increase my position in that. So not a lot happened, not a lot going on this week. Been pretty busy doing other things, had some things to deal with, tied up in that. Somebody asked me to comment in the last one. So what's a good pick? What's a good stock pick? Well, I don't do that, nor would you want me to, because what's good for me ain't good for you. My strategy and style is totally different from yours. Encourage you to do your own homework, definitely. Just encouraging you to do something. If you do nothing more than put money in a savings account, hey, it's a step in the right direction, right? Within your own comfort level, and you grow, you gain knowledge, and feel comfortable doing other things. Investing money back into your own business is a good way to go. But just a quick thought. Somebody, that question prompted me to think. If I was looking for more opportunity for myself, and I am, I was thinking about pharmaceuticals. And I think there might be some missed opportunity there, or there's some opportunity coming up. It seems that any of the companies that came up with a vaccine for the current situation kind of got a bump in their stock price, right? And a rising tide floats all ships, so most other companies did as well. But I was thinking, I bet there's some pharmaceutical companies that are being some really good companies right now that are probably being overlooked and kind of just ignored because they didn't have a vaccine for this current situation. So I got to kind of thinking about that. I looked through the portfolio and I'm like, okay, I got a couple here, 3 that are pharmaceutical that did not come up with a vaccine. Bristol Myers, ticker symbol BMY, Viatris, VTRS, and AbbVie, ABBV. I kind of want to own all 3 of them. More of all 3 of them right now. Viatris just raised their dividend 9% last week. So going to take a closer look at these three and see which one I want to add to more. And I think maybe next week, if I remember, I'm going to put some more money in there. But it's just could be very wrong about that. Maybe once I look into it, I'll notice, okay, maybe they're not being overlooked. But it's just a thought I had, and I'm going to do some more homework on that. Definitely encourage you to do your own. So kind of what I want to talk about briefly this week is inflation. I don't think any of us would probably say there's no inflation right now. There's definitely inflation. It's kind of got us in a bad position right now. But it's kind of rare for the government to admit there's inflation. They don't like to admit that because it costs them more money in a lot of different ways. Cost of living adjustments for Social Security, increase in interest rates for debt payments, all kinds of reasons they don't want there to be inflation. But they finally had to admit it. And the way, kind of an admission for them is there's a bond out there called a Series I bond. You've probably all heard of double E bonds, like your grandparents would probably buy you 50 years ago and say, you save this for when you're older. Well, there's also one called an I bond, which is basically a savings type bond pegged to inflation. So in an I bond, you can look at these. I do not recommend these as an investment because the government lies about inflation, and I still think the rate is still too low. I don't think it. I personally don't believe it keeps up with inflation. But just if you want to look at them and learn about them, you can go to treasurydirect.gov. You can buy them right from there. That's the government's bond website. You can learn all about them in addition to double E bonds, Treasury tips, Treasury inflation protected securities, all kinds of different things. Treasury notes, Treasury bills. I'm just going to look on the website here. So an I bond has kind of two interest rates tied to it. One is a fixed rate, and one is the rate pegged to inflation. So they both can change every 6 months. The fixed rate is set. They don't change a heck of a lot. And then the inflation rate, they supposedly change to reflect inflation. The rates on these things have been historically low. I'm just going to look at the inflation portion of the rate. Let's go back to May of 2018. The inflation portion of the bond is 1.11%. May of 2019, 0.7%. May 1st of 2020, 0.53%. So as you can see, I mean, if you can remember back 2 years ago, 3, 4, 5 years ago, I think we could probably all agree that inflation was more than 1.1% or whatever it was. Plus, the numbers that they keep are just nonsensical. They take out two of the biggest factors in our life, food and energy. So now let's look at May of 2021, 1.77%. So that's a significant tick up. Looking at November of 2021, 3.56%. I have to go back. I'm scrolling all the way back to September 1st of 1998. And I don't see a rate that high on the inflation side of it. Now, the composite rate, they have dropped the fixed rate portion of it to 0 to offset the inflation part of it. So to manipulate numbers to still make inflation not look that bad, which is completely ridiculous. But I mean, we have had the rate right now, the composite rate, the total rate is 7.12%. That's a high rate when you consider that. Now, this is according to their numbers. I'm taking this right off their website. November 1st, 2021, the fixed rate is 0.00%. This is right off the Treasury Direct website. And the semi-annual inflation rate is 3.56%. So when you times that by 2, you come to 7.12%. But the fixed rate is 0. So they're admitting basically to 7.12% inflation, which I think they're still out of their minds. If we go back, the rates on these things have been higher, but it's because the fixed rate was higher, the inflation part was lower. So it's a manipulation. I've read people saying that they think inflation is closer to 15 to 18%. And who knows if that's factoring in food and energy. But it's just another. I'm not buying these things. I just thought it was interesting that, and I wanted to point out that the government is finally having to admit to inflation, and that has to just drive them nuts. So, if you're thinking, if somebody's selling you on the idea of, hey, keep up with inflation, buy I-bonds, I don't. It's not a strategy that's going to work for me. I think I've talked about that in a previous video. I still, in that scenario, I love gold and silver, precious metals. I love, to combat inflation, buying durable goods now to use later, things that last. I also like my dividend portfolio because in a time of inflation, a company like General Mills can raise the price of their cereal, raise the price of their product. So it's not a true track of inflation, but I also don't believe in one single thing or putting everything in one single basket. So kind of spread it around a little bit. So kind of what I do. Just trying to encourage you to think, like, do you have a plan for inflation? Conventional wisdom says if you think inflation's coming, go out and borrow a bunch of money so that you're paying it back with inflated dollars. I think in the past that may have been a viable strategy. Nowadays, I just don't have that kind of confidence in the future. Things are entirely too volatile. There's way too much political and social distress, and I just don't believe in taking on huge amounts of debt, so I've just chosen another route. But anyway, that's all I want to say for today is, it's funny that the government finally has to admit that inflation is real. I find that funny because I know how much they hate it. Anyway, hope you join me next week, and thanks for tuning in.